Welcome to this presentation called Navigating the Home Buying Process. This is a complete guide for buyers in the DC metro area, DC, Maryland, and Virginia. I'm Ryan.Hehman, as you know from my new YouTube channel, which you're probably finding this on. I'm a real estate agent with Compass. I have been in the industry in some capacity since 2015 when I started buying rental properties in the Baltimore area. I have sort of taken a tour through the industry in various different capacities in terms of being a property manager, flipping homes, helping other investors by managing their projects, and landed into real estate sales in 2019, which I have been full-time since then. Today, I want to sort of take you through some of the points that a new home buyer starting this journey will need to know as they begin, and I find that this is pretty helpful to have everything just really upfront for buyers that I begin working with, because there are so many questions and they need some of those answers in one place. And a lot of today's presentation comes from my experience working with buyers and comes from some of their most frequently asked questions. So today I'm going to take you through that and we will just get started. Today I do want to talk about a little bit the state of the DC market, which is in March 2026, how to set up your search and what to think about before you do start searching. I'm going to talk about pre-approvals, some buyer programs, interviewing an agent there. Then we'll get into the home search process. This could be the place where most people actually are already familiar with what they're doing, because most people out there are already searching on Zillow. And the interesting thing here is that I'll share some tips and tricks and also some of my philosophy on how to go through the home search process, what's the best way to do that with the least amount of stress and pressure, and knowing that having the most amount of information available as well. I'm going to go through making an offer, the nuts and bolts of that, as well as the process from actually getting your offer accepted to the closing table. So just real quick, in March 2026, here's what we're seeing in the DC market. Now, up until 12 days ago or so, when the Iran war started, we had the lowest interest rates in 5 years. We were looking at rates in the upper fives. I was routinely having clients get under contract and lock their loans at around 5.75. Things have changed a little bit in the past week or two. We're now seeing rates hovering around 6%. And I think some of that expectation that rates were going to drop as 2026 progressed has now sort of gone by the wayside, as everyone is a little bit holding on and seeing what is happening. That being said, the market in DC is split into a few different segments. First of all, we have our micro markets in terms of different neighborhoods and areas of the DMV, where listings and inventory kind of have their own behavioral characteristics. And then we also have asset types in terms of like whether it's single family or condos. Those are also behaving very differently. In general, the condo market in DC, if you're looking at, if you have a condo and you're trying to sell it, the condo market is very, very slow right now. Inventory in the condo market has been piling up, and that's why we're sort of seeing this 18% increase in active listings here. Is that I think is very much affected by the condo market statistics right now. Conversely, if you are looking to get into the DC market, you need to move here for work, you want to buy something, you're looking at condos, it is a buyer's market in condos right now. And that is because there's a ton of condo inventory. Obviously, it's not moving. So buyers are able to pick up some discounts. They're able to negotiate. And there's a lot of sellers that really need to move. So they're very motivated, giving good opportunities to buyers. So condo listings are actively up, which is affecting this number. In other parts of DC, in terms of single-family homes from 800 to 1.4 million, as well in the DC suburbs, if you're finding homes are in good condition and priced decently, we are actually seeing that the spring market is beginning. And as the spring market begins, competition is heating up. There are buyers out there. There's been a lot of pent-up demand, people that have been waiting for interest rates to drop. They do need to move. And we are seeing some multiple offers and escalations and things like that right now in some places in the market. So as I said, every part of the market segmentation is a little bit different. As I speak, it is the first week of March, and we are heading into the spring buying season. And so we are expecting both more inventory to come online. We're going to see that especially as we get into April and as the weather gets better. We are also seeing more buyers come out and begin to compete, be interested in those homes as well. So more inventory, but also more buyer demand. This is the busiest time of the year for homeowners. So hopefully this, this presentation is timely for you if you are considering making a move. Thinking about mortgage rates, they say marry the house and date the rate. It's unclear whether or not you can ever be able to refinance in the future. The future is as opaque to one person as it is the other. And sometimes agents will say, marry the house and date the rate, meaning find the house that you love, worry about the interest rate later because you can always refinance. Historically, rates right now are at historically lower than average. This does not mean that it necessarily is the affordable choice for you to purchase. And it does not mean that rates will go back to where they were during COVID in the 3 or even 4% range. My old advice to all home buyers is if you need to move, move. When it is the time that is right for you in terms of your lifestyle, your job, what you want. You want to buy a place, you want to stop paying rent, you want to start building equity in a home, you want to have that asset protection that is symbolized by the home, then this is the time. You move when your life circumstances make sense for you, and move when financially it makes sense for you, which I'm going to get to in a little bit. But it's got to be something where I hear a lot of buyers, especially today, say to me, and this is right, I don't want to be house poor. I don't want to have a huge mortgage payment per month, be just barely scraping by, not being putting anything into savings, and be worried every month. So whenever it makes sense for you, financially, as well as with your life goals and your timing, that is when it's the right time to move. You can always refinance, and people do refinance typically. I bought my current primary residence in 2023, and I bought at 6.25%. And it would have been maybe 2 or 3 weeks ago when I saw that rates had hit, mid to upper fives. And when I started thinking about the refinancing opportunity myself, I didn't jump on that then, but in just that 3-year period, we did have a rate fluctuation that could have saved me probably $150 to $200 per month on my mortgage payment. So just a brief example, just to think about mortgage rates now and in the future. Interestingly, home prices have continued to rise. Homes have been appreciating still at a rapid rate, even as the market has softened and buyer demand has dropped a little bit. And then mortgagecalculator.org is something that I like to use a lot. Just you take the listing data from Redfin or Zillow, you throw it into mortgagecalculator.org, and you can get a good idea of what your monthly payment is going to be for that potential house that you're looking at. The first step in any buyer's journey is going to be to get approved. Get pre-approved with a mortgage lender. The first step is not looking at homes at Zillow, even though I already know that we already do that. But the pre-approval process is going to help you in a few different ways. Number one, it's going to save you time by setting your budget and helping you to narrow your search down to those homes that really make sense and are a fit to you. Now, when you reach out to a mortgage lender, you should try to get pre-approved rather than pre-qualified. With a pre-qualification, this is just when you enter your own information into sort of a website portal. It's self-reported income and assets. They don't check your credit. And they'll respond with sort of a form letter that you're pre-approved, you're pre-qualified for up to this certain amount, and people take this letter and will use this letter to make offers. This is not a very strong mortgage letter. Why? Because they didn't actually look at the verified information from your taxes, from your pay stubs. They didn't actually underwrite you. A pre-approval, on the other hand, you have to submit your full income and tax return review. You have to submit some bank statements. You get your credit file analyzed. It can be a hard pull on your credit. It can also be a soft pull. And this helps the mortgage lender actually know that these are your verified assets. So it gives you a real solid pre-approval. We take that pre-approval letter, and when we make the offer, the listing agent and the seller then know that the buyer has been underwritten, and it gives a great deal of confidence in the buyer and in the loan application. And then people know, that it's not that it's very solid. It helps your offer become a little bit more solid. So pre-approval is very important. Work with a dedicated local lender to get your pre-approval rather than a big bank. Big banks, even though it might be great to bank there, the big banks like Wells Fargo, Banks of America, they say that they have dedicated mortgage lending divisions, but the service in these mortgage lending divisions can be very bad because, honestly, frankly, they're big banks, and these dedicated divisions, what they do is actually Monday through Friday, 9 to 5. And we'll see in a competitive market in DC, Monday through Friday, 9 to 5 is not going to cut it. Because if you see a home on the weekend, you need to get in touch with your mortgage lender on a Saturday to get that pre-approval letter that is specifically outlined for that property with your offer price in it, and you need to submit it on a deadline of Monday morning at 10 a.m. You need a mortgage lender that is going to take your phone calls on the weekends. In addition to a small local mortgage lender is usually going to have much better service, much quicker turnaround times, and the experience while you're under ratification, when you're actually completing the transaction, is going to be much better. In addition, these small mortgage lenders typically can close much faster. Between 14 to 21 days is not uncommon for a smaller mortgage lender, whereas if you ask a Bank of America, Wells Fargo, if they can close a file that quickly, it's not going to be something that they can do. They'll usually tell you 30 to 35 days. And that is something that in the DC market, in a spring market, in a competitive market, is just going to be a challenge for some sellers. So it's important to get the pre-approval, to submit your documents, to work with a couple of local mortgage lenders, to solicit quotes from a few different lenders to see where they are on rates and also where they are on what specific loans they can give you, and if they have any home buyer programs or any special loan programs for first-time buyers. There are a few different first-time buyer programs that you can go through kind of your municipality. There are sort of these civil programs that sort of get tacked on at a state or a sort of a county level. One is the Maryland Mortgage Program, which has a bunch of qualified lenders that are able to help you with that program, which you can just look up on their website. And another one is the DC Home Purchase Assistance Program, which is actually very competitive and very can be difficult to navigate at times. There's timelines, and you have to meet with a housing counselor, and then you have to also meet some of their income criteria and make sure that their algorithm is working correctly. The Maryland Mortgage Program is a down payment assistance program, fundamentally giving you up to 6% of the down payment as a interest-free grant that does need to be repaid. You do need to be a first-time home buyer. You must have a minimum credit score threshold, certain income requirements, so teachers, first responders, and other public servants, you can typically find buyer programs for them specifically, but you don't have that qualification for the Maryland Mortgage Program, actually. So this can actually help you get into a property with zero money out of pocket, with $0 down. The only things that can do this around here that I know of are the Maryland Mortgage Program and or a VA loan. FHA loan will have a lower down payment of about 3%. And so these are really great, and I had a Maryland Mortgage Program client once who actually walked away with a check from the closing table that was a reimbursement to him. Basically, instead of buying the house, he received a check at closing as the buyer, and it was a reimbursement for his earnest money. We will talk about earnest money in just a second, but research these programs yourself and let me know if you have any questions. These are very good programs. There are other local lenders that I can as well direct you to that are able to offer mortgage programs designed to meet low and moderate income individuals with lower down payment requirements and flexible underwriting. They can do down payments as low as 3%. There's no mortgage insurance requirement on those loans, which can up the payment in a normal situation. Flexible credit guidelines. And you get also very good interest rates. The only sort of requirements there are that the properties must be in certain areas. They must be located in low to moderate income census tract areas, which you will actually be surprised where those are actually able to be, where you're able to actually buy and where the program is actually able to be implemented. It's very interesting. So look those up and let me know if you have any questions. Next step on your home buying journey is interview your realtor. Here's a few questions to ask when you're going to interview any realtor. You can come up with your own as well and ask AI to help you to interview your realtor. But it's really important to ask a few questions when you have that initial conversation with your realtor. You want to check if you are personally going to get along with that person. You want to ask what their working style is. What do they think is important when working with buyers? You want to do kind of a vibe check, kind of a gut check, right? You just want to ask them about their experience, how long they've been in the industry. You can ask them about how many homes they sell per year and where most of their homes are located that they sell. This is also public information, so you can sort of check exactly where and what your agent is selling to verify. You should talk about with them in that initial conversation, how does the payment work? How does your compensation work? How and when will you be paid? And what are all the fees that I need to know about? You should ask, do we need to sign a buyer agency agreement? How many buyers do you help per year? If you're a buyer and you were looking for a realtor to help you buying a home, you don't necessarily want to work with an agent that is heavy on the listing side. You do want to have somebody that is very experienced and works with a good amount of buyers. And then I think an interesting question for a buyer to ask a realtor that they might be interviewing is, what do you look for in a client? What is a way where client and realtor relationships go right? I think that's will reveal a lot about how the relationship will potentially go. I also like to sort of talk about in this meeting what my personal kind of philosophy is in terms of helping clients, what I see as the value add, or how I see my services, what's important about my services. One is that I think that communication is really everything in terms of being a real estate agent. You do not want to waste any time, and you do not want to miss any opportunity when you are looking for a home. So responding to texts in a timely manner, responding to emails, and keeping the buyer on track in their timeline and making sure that everything is really set and straightforward and that the buyer always knows where they are at in the transaction and is not left wondering, where is my realtor gone, what's really going on in the transaction, what's the next step. We want those questions to be known, and we want you to be totally grounded in your real estate transaction timeline. And I think communication is a huge part of that. So that's one thing that I like to talk about when I have these initial conversations with clients, is how important communication is in terms of the realtor and client relationship. All right, so now we're getting into the home search process. You've talked to your realtor, you have interviewed them, you have hopefully signed a buyer agency agreement, which allows me to negotiate on your behalf, allows me to ask questions on your behalf, and also allows me to work for you in terms of finding properties that could be off market, to talk to listing agents, to talk to other realtors, to see what's coming up. If I have your search particularly in mind, to really be out there beating the bushes for you and working for you as my client. Also, according to the NAR settlement of 2024, having a buyer agency agreement in place actually is the law, is required by law before showing a property to a buyer. And the reason is that because those buyer agency agreements outline compensation. Like I said, that should be one of the questions you ask your realtor is, how do you get paid? What is the compensation structure like? And the buyer agency agreement outlines that. So you should have that signed so that there's a knowledge and understanding of that before you see any homes. All right, the home search process. Here are some listing statuses that you're going to see. You sign on to work with your new realtor partner, and the first thing I'm going to do for you is I'm going to set up your search portal. Through our Compass portal, I'm going to set up a search for you. It's going to be very similar to your Zillow and your Redfin searches, with a few different distinctions. Number one, it's going to show you all of our exclusive off-market properties that are only within our Compass network, called Private Exclusive. It's going to show you those properties which are not searchable on the other sites. So that's one thing. It's going to give you a bit of an advantage to seeing some properties that are going to be able to come on the market soon. Some of these properties do sell off market and remain off market as well. In addition, in the Compass search portal, you're going to be able to make notes on properties that I'll be able to see, and I'll be able to add info directly to those properties as well that you will be able to see. Now, with those properties, a lot of times what I like to do is I like to add information for my clients in the comments that say, here's what it says in the private remarks from the agents. Here is what the disclosures are saying. I'll sort of peruse the disclosures, the seller disclosures if they're available, and I'll say, just FYI, the roof is 20 years old, or they haven't replaced the HVAC in this many years, or there are solar panels on the house and you need to inherit the solar panel loan. Those sort of things can be helpful as you are looking at properties online. So there's Private Exclusive, which is one status that you'll see. There's Coming Soon. In the general MLS, Coming Soon, showings are not available when it is on the market in Coming Soon, in bright Coming Soon. And usually these homes will be coming on the market within the month. There is no time limit to how long these homes can be in Coming Soon. Active means this home is available. It's available to schedule showings. You can go and see it. They may be having open houses. It is actively on the market, and days on market are being counted. Then, under contract or pending means that a contract has been accepted and the seller is starting down that process with the buyer. Typically, if you see something that says active under contract, usually it means that there's still a couple contingencies that the buyer and seller need to remove from the contract, which are the home inspection contingencies and the financing contingencies. Usually once the home inspection contingency is removed, this status will go to pending, and these contracts don't fall out of contract and come back active that much, although they can. And then finally, the sold status. You can look at this just to see what prices are properties actually trading at, because the list price is one, the under contract price is a different thing, and then what price did the property actually sell for? Was it on the market for a few weeks and then they got an offer below asking, negotiated and sold below asking price, or did it sell above asking price with multiple offers very quickly within only a few days of being on the market? That information is valuable for a buyer as you're beginning to navigate the market and learn what the housing market is like. All of this is very important because it's important to get a feel for the market. And as you watch the market and as you explore the home search portal, explore all these listings coming on the market, watching them go under contract, watching them be sold, it's giving you a sense for evaluating, your potential purchase. You're getting a sense for the market. You're learning it. You're gaining market intelligence, so that when the time is right for you to make an offer on the property, you've seen a good segment of the market and you feel confident that this is the home for you and that this is the price that you'll pay. So in your search, I always think it is smarter to start with a wider net. A lot of times buyers will come to me with very specific buying criteria, which is great. I always like it when buyers know exactly what they want, because that does make the search process easier as we go along. But in terms of the property portal, if you narrow your search too much, you may miss a great home that you would have otherwise been interested in. And you don't want to miss a great home over like a minor feature because you decided to put, 1,500 above grade square feet versus 1,400 above grade square feet. Or it definitely needed to have that extra half bath when maybe upon further reflection or seeing a few open houses, you might think, actually, that's not really a deal breaker. So start with a broader search and whittle your way down from there. It'll take a little bit of legwork, but you'll get there and you'll really develop a good sense for the market. Also, ask and have me put into your search withdrawn and expired listings as well, or canceled listings, so that when you see these pop up, they'll come into your mind, and this is an extra opportunity for you. If we discuss these properties, I can always reach out back to the listing agent or to the seller directly and inquire what's going on about that property, and maybe we can continue to come to a deal. This happened to me a few years ago where there was a home here in Mount Rainier, Maryland, that had gone off the market. It had an expired listing at, I think it was something a little over 300, maybe 325 or 330. My client saw that it expired, sent it to me, and the timing was such that they hadn't seen it in their search previously. She sent it to me. I called up the seller. I asked them if they were still interested in selling. They said yes. We scheduled a showing, and then we made an offer at around the 275 mark, and the seller accepted it. So the buyer got a great discount just because she was watching expired listings. See homes in person. The next point I want to make is just to get out there in person and shop. Go to open houses, and then call your agent to schedule in-person visits. Seeing a house in person where you actually inhabit the space, you're thinking about how you're going to live there, you're feeling the feel of the space, imagining where you eat, what your life is going to be like, is so different from seeing the property online and just looking at it in pictures and even doing a virtual tour. So I always encourage people to see as many homes in person as possible. And then the same with neighborhoods. Visit the neighborhoods that you're thinking about as often as possible. Visit them at different times of day, visit them on the weekend, get a feel for really what's going on in some of those neighborhoods. All right, you've found your home and you're ready to make an offer. You've done a few months of really diligent searching, of going to open houses and seeing properties, and now you're ready to actually make your offer. The first thing I want you to know is do not be afraid to make an offer. Let's say you have these two scenarios. The first scenario is you found a house that you like, you've been looking for a little while, and the house has been on the market for a few weeks, and there are no other offers in hand. You want to make a lower offer, but you're afraid of insulting the seller. Do not worry about the seller, and do not worry about insulting anybody. My job is to be the go-between between you and the seller, and to communicate in a way that makes your intentions and what you're thinking clear to the seller side in a palatable and political, in a sense, way. So don't worry about being offensive with a low offer. We can always come up with our rationale and present our rationale for a low offer to the seller. Make the offer that makes sense for you. If you're thinking about this home, I love this home, but not at this price, make the offer that makes sense. If you're thinking, I love this home, it's my dream home, and it's competitive, but I need to only go up to my max price and no further, well, make the offer that makes sense for you. Do not worry about making the offer, and do not worry about the time that it takes, and do not worry about anything with that, but just make the offer, because a lot of times people have been surprised either that lower offers have been accepted or that in a competitive situation, their offer that maybe wasn't the best offer out there was still in terms of price and terms, was still accepted. So that does happen. So here are the nuts and bolts of putting together the offer. If we walk away from a showing and you say, we would like to make an offer on this property, okay, the first two things I'm going to ask you for, the one is the pre-approval letter. This is, like I said at the beginning, the letter from your lender with the property address and your offer amount on it that says you're pre-approved for a mortgage with their company and that you've been underwritten and that your assets have been reviewed and everything looks great. This is an important part of the letter. It goes on page 1. The second thing I'm going to ask you is, how much of an earnest money deposit do you want to make? I'm going to be talking about the earnest money deposit in the next slide. This is typically 1 to 3% of the purchase price. It's a deposit that is made when the contract is accepted that shows good faith. Those are the two things I need from you in order to begin writing up the offer. Then we'll talk about the main contract body. The main body of the contract, which just has the details of the property, the selling and buying parties, the address, the sale price, the settlement date, and some other boilerplate terms in terms of how the property is going to transact. Then there's a few addendums that could be important and are going to figure into the process. There's the financing addendum. This addendum says that you are going to apply for, let's say, a conventional loan, that you will complete the application within so many days, that you have some basic terms of your financing that you're pursuing. And it also says that if you aren't approved for financing within a certain time frame, that you will be able to terminate the contract and receive your earnest money deposit back. It also stipulates that as a part of that financing approval, the property will need to appraise for the agreed contract purchase price. So the appraisal will be done, and if the appraisal does not come back at the agreed purchase price, and the seller and buyer cannot come to an agreement about that, then you will be able to terminate your contract and receive your earnest money deposit back. Another part of the contract will be the inspection addendum. This addendum says we are asking for a certain amount of days, 5, 7, 10 days, to conduct property inspections at the buyer's expense at the property so that we can make sure that there are no big issues. These include structural and mechanical inspections, which typically the general home inspection is a structural and mechanical inspection, identifying any problems in those parts of the house. Wood-destroying insect inspection. Mold or radon are possible inspections that you might want. Chimney or lead paint inspections. Also, lead paint inspections are not common, and neither are mold inspections. Those things are usually flagged during the standard home inspection. But the inspection addendum says you'll have, let's say, 7 days to complete these inspections and to respond to the seller with any requests for repairs or credits as a result of any defects. A credit would be you're asking a seller basically to pay or transfer to you a certain amount of money from their net proceeds at settlement instead of fixing or repairing the problem themselves. And then finally, there's the seller. Oh, I'm sorry. And with the inspection addendum, one more thing, you'll have typically in the standard Maryland contract, you'll have the right to cancel during that inspection timeline, and you'll have the right to negotiate, which is the right to ask for repairs or credits based on any defects you find. Finally, the seller credit addendum can be done in two ways. It can be added initially to the initial offer, where you make your offer with a certain purchase price and certain terms, etc., as described just a second ago. And let's say you offer the purchase price for the house, but you're also asking for seller credits to help you with closing costs. You can add that seller credit addendum up front, where the seller basically transfers a certain amount of cash to you at closing that reduces your closing costs. The other way that the seller credit addendum can work is that the seller credit is agreed to during the inspection negotiation period, and this addendum is executed as a result of that. So here's what we mean when we talk about earnest money. Okay, you're buying a $400,000 home, 10% down. Your purchase price is $400,000, your down payment is $40,000. And by the way, on a $400,000 home, you will probably have about $15,000 to $18,000 additional closing costs from lender and title, taxes, and home insurance built in. So just imagine or remember that if you're purchasing a property for $400,000 with a down payment of $40,000, you'll probably actually need to bring $57,000, $58,000 to the closing table for that. Okay, this is something that your lender should discuss with you when you get pre-approved at your first conversation with them. And a good lender, a lender that you want, is going to send you an Excel spreadsheet that's going to detail and break down all of the costs that you're going to be paying, not just at closing, but what your closing costs are going to be, but also what your monthly payments are going to be. And you may want to use those monthly payments to sort of calculate your budget, what you feel comfortable with. Earnest money, like I said in the last slide, is the down payment on the down payment. It is the good faith deposit that you make when the contract is executed that says to the seller, this is my skin in the game. This is my promise that I am going to meet all my contract timelines, that I'm going to close in the timeline that I said. I'm going to execute this contract as I said. And if I don't, I know that this earnest money is at risk. My job is, as a realtor, is to help you meet all of those timelines and keep track of all of those timelines, and to keep your earnest money safe, so that if you back out of the contract, you do so according to the contingencies, and that there's no difficulty in getting your earnest money back. So if you earnest money typically is between 1% and 3% of the purchase price. An $8,000 earnest money deposit down on a $400,000 home is just fine. Sometimes people put less, especially if they're using one of the first-time buyer programs, and maybe they don't have a lot of cash out of pocket to put down for earnest money. Sometimes people put down more earnest money because either they have a good amount of cash, or they want to signal the strength of their contract. It could be a competitive offer situation, and they want to signal that they really love the home, they're willing to risk everything, plus they have the liquidity to make this work. So sometimes people put down more than 3% as their earnest money deposit. It's up to you, and one of the questions I will ask you when we do begin to write the offer is, how much of an earnest money deposit do you want to make? This earnest money deposit is credited back to you at closing. So it's part of your down payment. So let's say, as you can see here, your down payment total is going to be $40,000. You decide to put an $8,000 earnest money deposit down. Well, you only need to bring now the difference. $32,000 to closing, because that earnest money deposit, which is held by the title company in escrow while we're under contract, gets credited to you against your other closing costs at the time of settlement. So they keep your money safe, and that money is credited to you. Okay. Now, as I said at the beginning, kind of the state of the current DC market is that we are seeing multiple offers on some properties. But a competitive market has really been a feature of the DC market as long as I've been here. Well before the 2008 crash, we saw competition. And that competition can take various forms. And buyers deal with this competitive situation in different ways. Some things that people might do in a competitive market, they may make an offer above asking price. A property near me recently sold last weekend in the second day on the market by making an offer that had a 14-day closing timeline, and it was $15,000 above asking price. And the strategy there was to, in the second day of the market, of the home being on the market, to come in with a strong enough offer that the seller would accept it right away, without waiting for other offers to come in, without waiting to see what would happen, without waiting to get into a bidding war to see if prices escalated very much, but to make a very strong and very fast offer right away on a property that those people loved, above asking. So that's one strategy. In order to do this, I always want clients to be aware of two things. One, I want them to have experience in the market. I want them to have seen a good deal of homes. I want them to be comfortable with the market reality. I want them to have a good sense for what the value is for what they want and what's in the market before they pull out all the stops and just pay whatever they can pay. Then also, I do want to help people by looking at what else has sold in the market, because we do need to think of where an appraisal is going to come in. If you're using bank financing, we are going to have an appraisal most likely, unless you waive the appraisal, as I'll talk about in 1 second. And we want to be sure, and we want to be understanding of where prices are landing in the neighborhood. So those are some things that we can do. Also, you can use an escalation clause if you're making an offer above asking price. An escalation clause says, in the presence of other offers, let's say I made this offer, this house is listed at $400,000. My offer is for $400,000. But in the presence of any other offers, my offer will immediately escalate $5,000 above that other offer up to my maximum of $450,000. Now, if another offer comes in at $410,000, your offer automatically escalates to $415,000. If another escalating offer comes in, that escalates up to $430,000. Your offer automatically escalates up to $435,000. So an escalation clause, while it might seem scary or kind of tricky, actually protects the buyer from making a blind offer in a multiple offer situation, because your offer is just escalating based on the other offers that are present. So it does keep you from paying more than you are comfortable with. It's a little bit of an inbuilt help for a buyer. And in the DC area, escalation clauses are more common than not. There will be some times when agents say, no escalation clauses, just send your highest and best. But my sense is that sometimes when agents do that, they don't want to deal with the mathematical calculations for determining how those escalation clauses are settled, because it can be pretty tricky. But escalation clauses, in effect, actually do protect the buyer by offering an escalation increment and by not going beyond your escalation maximum. Next, you can do one thing that people do when offers get competitive is people will typically, they'll waive their home inspections. they'll say, okay, I might have gone with a home inspection here, but now I know that sellers want certainty. Sellers want contracts that are going to be ironclad. There's no chance for someone to escape. We know that it's going to close. We want certainty. An inspection offers, uncertainty from the seller's perspective because they don't know what you're going to find. They don't know who your inspector is. They don't know what you're going to consider a red flag versus just regular home maintenance. And an inspection offers uncertainty. I cannot, as a buyer's agent, really recommend that you don't inspect a home before you're buying it because an inspection protects the buyer. It helps you to know what you're buying. It helps you to have an idea of what the maintenance items are going to be going forward. If there are any red flags or issues, typically what the ages of a lot of the systems, appliances, and different features of the house are, and what you're going to be looking at going forward as the owner of this home. What you can do is do a pre-offer inspection where you do kind of a 1 to 2 hour walkthrough with a home inspector where he doesn't do a full report for you, but you point out and look at the major features and items in the house that could be troublesome. This is going to cost you $500 to $600 potentially up front, maybe a little bit less with no report. The danger or the risk for the buyer is that you're inspecting this home before, and you're spending this money before you're under contract in order to waive this inspection contingency. And so you are risking, you're spending this money without the assurance that you're going to be able to buy this house actually in the end. But it does make it a much stronger offer if you're able to do that. So it's a little bit, there are pros and cons to it. In addition, if you do find something on the pre-offer inspection that you don't like, it's got to inform your initial offer. It's very difficult to negotiate with the seller on it in a competitive situation because the seller does not, you can't send them the inspection report. And so the pre-offer inspection also may tie your hands a little bit because the seller is not contractually obligated to make any repairs based on anything that you find on the pre-offer inspection. So that is one thing that you can do to continue to protect yourself in a competitive offer scenario, but it does come with its drawbacks. Same thing with the financing contingency. This comes back to one of the important reasons why a lender should be pre-approving and underwriting you at the time of pre-approval is so that you may be able to waive your financing contingency. If the lender underwrites you ahead of time and knows that you're going to be able to get financing and that they're going to approve you, then your lender can advise up to a certain price that you can waive your financing contingency. The lender, if you're doing bank financing, though, will still need to do an appraisal on the property. And if you keep the appraisal contingency as part of your offer, and you escalate your price up, then the appraisal could become an item of negotiation later on down the road while you're under contract. Again, bringing up the seller's concern for uncertainty, this may be something that the seller may not like. So if you keep your appraisal contingency in the contract and everything escalates like crazy, it may be a fly in the ointment for the seller. A bit of uncertainty down the road because if the house doesn't appraise for this crazy price, then we're kind of back to square one in a way, coming back to the bank appraised value, negotiating over the value of the house. And if the house appraises for less than that contract purchase price, one of two things can happen. The buyer can pay extra cash out of pocket to cover the gap between the appraised value and the contract value, or the seller can come down to the appraised value or the buyer and seller can meet somewhere in the middle. In the event of a competitive offer situation, sometimes buyers will write an addendum offering to cover the appraisal gap between the appraised price of the house, the appraised value of the house, and the contract purchase price. They'll offer to cover that, in cash whenever that happens, if the appraisal comes back low. Or a buyer will sometimes offer to cover a certain portion of that appraisal gap. So they might say the buyer will cover up to $20,000 in the difference between the appraised price of the home and the contract purchase price. Agreeing to outright that the buyer would cover that $20,000 above the appraised value if the appraisal comes back low, and that the seller would come down to the purchase price of appraised value plus $20,000. So that would be sort of a compromise scenario, and also a way that you could structure your offer to be competitive, but still minding the amount of cash liquidity you have to cover an appraisal shortfall. This is potentially the most complicated part of a competitive offer situation. So if you have questions, please reach out to me about this. Very wonky, very in the weeds detail about this. So the next thing is that just simply you can offer a very fast settlement. Typically, title companies need about 2 weeks to close. Some can do them a little faster, especially if it's a very clear and easy title situation. Some lenders can close in about 2 weeks, some a little bit less. But offering a fast settlement, if that is what the seller wants, can be very advantageous. It can be very attractive to a seller. And then again, as I said before, you can always offer a very large earnest money deposit. If you had $100,000 to put down on a property and you want to offer that as an earnest money deposit because, hey, you were going to put it as part of your down payment anyway, you can do that. And that signals to the seller, hey, these buyers love this property and they're really locked in here. So it's a big signal of intent to sellers. Okay, so we've navigated the home search, we have written our offer, we have negotiated our competitive offer scenario well, and congratulations, our offer has been accepted. That's great, congratulations. Once that happens, you're going to get a phone call from me and an email offering you the fully ratified contract for your records and a timeline on the next steps. From there, I'm going to send the contract to your lender and to the title company so that they can get started immediately. What you will need to do typically is you'll need to deposit the earnest money deposit within 3 business days to the title company. Usually you can do that via wire or via electronic payment. Usually it's no big deal. It's pretty easy. You don't need to go anywhere to do it. If we have a home inspection, the next thing we'll need to do is schedule the home inspection ASAP. Because depending on how much time we have on that home inspection timeline, we want to get it done as soon as possible. It can be difficult to schedule with home inspectors, especially in the spring when there's a lot of buyers out there. So we want to be researching home inspectors if that's something that you want to do as a buyer, figuring out which home inspector is right for you. I always have recommendations and can help to schedule the home inspection as well. We want to get that done as soon as possible. We do want the buyer, or at least one of a pair of buyers, to be there present at the home inspection on the day of the inspection. Let's say we have our home inspection contingency is 7 days. We have 7 days to have the home inspection done, to receive the report back from the home inspection, to discuss it, and then to present the seller with any repairs that are needed that we're asking for as a basis from the home inspection. So there's quite a lot to do in sometimes a very short time, and it can take a home inspector sometimes 24 hours or 36 hours to get a home inspection report back to you. So it's important to schedule a home inspection quickly, to have it done quickly and on time, so that we maintain the integrity of that inspection contingency and keep your earnest money deposit safe and keep rolling forward with the transaction. Also, at the time, right after your offer is accepted, if you haven't completed your loan application, you will need to do that with your lender as soon as possible. So there will be other documents from your lender that you'll need to submit, other things that you'll need to fill out, and the appraisal will need to be ordered for the bank. The lender will take care of ordering the appraisal, but it is something that you need to pay for at the point of service when the appraisal is ordered. Same with the home inspection. You need to pay for the home inspection at the time that it happens, and you'll need to pay for the appraisal at the time that it is ordered. The appraisal can be rushed. Sometimes it can take between 7 and 17 days to come back, depending on the closing timeline and depending on a few different factors. Then the next thing that we're looking for is loan approval. You may remember, as I mentioned, part of that financing contingency is that the lender will need to send a commitment letter within a certain timeline. Let's say you have a 30-day close. Typically, I'll write in a contract that the lender will need to send the loan commitment letter within 21 days that they have approved you for your loan, and that there are only a few outstanding items that they need to get. The appraisal might be one, and a few final things on the clear to close and final income verification. That loan approval will come, and then once we have the clear to close from the lender, we will schedule our final walkthrough at the property for usually the day before or the day of settlement. Before we do this, 3 days before the final walkthrough and settlement day, you want to set up the utilities in your name. You got to call and schedule those for the settlement day. For the final walkthrough on the day before or the day of settlement, we are going to visit the property and just make sure that everything's okay. We're going to make sure that it's in substantially the same condition as it was at the time of the home inspection, or if there's no home inspection, at the time that we made our offer. From there, that usually doesn't take long, and usually there are no issues. The seller has completely 100% moved out unless you have a post-settlement occupancy agreement where they can stay for a little while. But anytime before you buy a big purchase, right, you want to make sure you look at what you're purchasing right before you purchase it. We want to make sure that that house hasn't burned down, that nothing is flooded, that everything is working, nothing is dripping, and that there's nothing wrong with the house that the seller needs to correct. If you show up at the house and there's been some damage to the house, or a tree has fallen through the roof or fallen in the backyard or something like that, that needs to be corrected before settlement, because that is the seller's responsibility up until you sign your docs. From there, from the final walkthrough, we are going to the title company, and we're going to sign all the loan papers. We're going to sign the settlement paperwork, and you are going to get your keys, and then you are the proud and happy owner of your new home. Before your loan approval and before closing, it is very important not to make major purchases, not to open new credit lines, make large cash deposits, or change jobs. One of the things after the loan approval but before the final settlement is that the lender re-verifies your credit and employment, and these things can put your settlement in jeopardy. So don't go out and buy a boat as a congratulations gift to yourself, because it could jeopardize your home purchase. A lot of people often ask how they can back out of a contract. While this is not something that is desirable, it does happen on occasion, and people need to know what outs they have from a contract if things go sideways. So typically, your home inspection contingency is the big one. If you have the right to cancel in your home inspection contingency that says, based on any of the findings in your home inspection, you can terminate the contract, then your home inspection contingency is a big one. And you, on the Maryland contract at least, both Maryland, the contracts, the GCAR and the Maryland Association of Realtors contract, if you have that right to terminate or the right to cancel from your home inspection contingency, you don't need to specify why or what exactly it was with the home inspection that made you back out. You really can just do it for any reason at all. You can cancel your contract due to your financing contingency, but only if your lender does not approve you of financing. If your lender does not approve you for financing, or the appraisal does not come back at the purchase price, then you must renegotiate that. But failing to renegotiate that or failing to get approval for financing does allow you to back out of the contract and receive your earnest money deposit back. It's important to know that if you don't have a home inspection contingency, you may not use your financing contingency to back out of the contract by asking your lender to not approve you. That would be negotiating in bad faith and potentially a fraud. Usually the last out that people have from a contract is their condo document or HOA document review period. Depending on the jurisdiction, the timelines are a little bit different, but if the property is part of a condominium association or a cooperative or an HOA, contractually you have an addendum that will provide you with a certain time period through which the seller must send you the condo documents or the HOA documents. And you have a certain time period through which to review them, to review those documents and to say, if there's anything in those documents that you don't like, you can terminate your contract without any penalty. So it's a bit of a catch-all, a real opportunity if there's anything that you don't like in those condo docs or HOA documents to terminate the contract. There are times when buyers use this, to terminate a contract, just because they found something else on the market that they like, or for some other kind of crazy reason. They use the condo doc review period as that excuse. It is a very strong contingency in the contract. You cannot waive the condo document review. You cannot waive the condo document contingency either, because it's afforded to buyers by law. By law, sellers must provide these documents, and by law, buyers have this privilege, and this is a privilege that they cannot waive. So buyers are protected. So there's a lot of reasons not to like condo associations and HOAs, due to some of their restrictions and regulations. It's a bit of a joke. A lot of people say sometimes they don't want to be part of a HOA, but this is one advantage to purchasing a home in a condo association or an HOA that you have during the transaction process. So that's pretty much everything from the initial time that you look to buy a home, to your settlement on the home, and to getting the keys and walking across the threshold. If you have any questions at all, would love for you to reach out. You can reach out to me at my email address or my cell phone, which is right here. I'm always happy to talk. I'm always happy to have a free consultation. As I mentioned earlier, one of my sales philosophies is I'm never trying to be pushy. I believe that realtors are supposed to arm their clients with information, and buyers and sellers are supposed to use that information to make the best possible decisions for them. This comes in a lot of different forms, and it comes in a lot of different timelines. And what we do are as realtors is to advise you on all of the potential outcomes of these decisions that you might be making, and to help you prepare for those decisions with the most amount of information that we possibly can. So we're definitely advisors in this process. And so if you would ever like to have a conversation, please just feel free to reach out anytime. I'm always open and happy to talk, and I look forward to hearing from you. Thanks very much for sticking around to the end of the presentation, and I hope to meet with you soon. Take care.